Yeah, so let's dive in to this concept. So let's dive into this concept. So I want to quickly explain two things, though there might be more than two, but one thing that is very important in this is the trend line is very important and session is also very important. So this type of strategy on Malaysian support and resistance is called um, session break. You understand? Session break, you can call it session break, liquidity break. So you can call it those name. You understand? So and what do we mean by liquidity break? So you can see we have pools of liquidities on 1 hour time frame. You understand? So we have pools of liquidity around every region. You understand? We have pools of liquidity around every region, every region. So and two ways in which markets move is uptrend and downtrend. So the only way you can use it, there are three ways. We have range market also, but the two ways in which we are very interested in is uptrend and downtrend. So we can't use this when trading, when market is consolidating. And each time market is also consolidating, there are ways in which you can use concepts, to dive in into that aspect. So and again, we have rally base rally, we have drop base drop. You understand? So these are the major things we need to understand when trading. Yeah. So we still have other aspects. We have drop base, we have a drop base rally, all those just but the main thing we need here is we need rally base rally and drop base drop. That is what we need, and we want to take advantage of anywhere we have uh, base. You understand? Anywhere we have the base, that is where we want to take advantage of. You understand? So that is another aspect we need to consider again. So considering the base, so let's dive in first. Um, First of all, we use our trend line, our line chart. I mean, to mark out our trend line on 1 hour. So because I want to make sure it is very clear. That's why I'm using 1 hour. I also use 4 hour. You understand? If I want to mark out just major points at which there's liquidity. You understand? So if I want to mark out one major point at which there's liquidity, that's number two again. Just jot all these points down and just jot it down. So in this contest, let's focus on this. Maybe let's focus on this side from year to year first. Let's focus on year to year first, and we'll be considering the rest. Just I want to just make little explanation, because once you get the idea of this little explanation, you can do multiple trend. You understand? So let us take, because this contains uptrend and downtrend. So let me just take, because we still have downtrend here, downtrend here. We have I think it's just like consolidation at this region, but we still have downtrend, uptrend, downtrend. You get? So I just zoom in to see those actions. So what we have to do here is, let's assume price tap on this level here. Let me switch to candlestick. So let's assume price starts from this level here. You understand? And you are looking for a way to buy, and you want to approach this SNR to this trend line, so that you are looking for a way to buy. The first thing you have to do is go to your line charts and mark out. Sometimes it might be two, and sometimes it might be just three. So it depends on what you are seeing in the market. So in this case, I'll mark out this trend line. This I know this is I created under I before it was later broken. You understand? So mark out three, because on this side I'm saying three. It is very simple, to be honest. It is very simple, but you need to open your eyes to see it very clearly. You get? This is another type of SNR that is trend based. It is trend based, So we use two type of trend line. We use the horizontal and we use the vertical and the horizontal. So the vertical might be at left side, it might be like this, at this facing the right side or at the left side. You get, so it might be on this side or on this side. You understand? So that's what I mean. And we also use the vertical line also. So we use vertical line like this. No, I mean horizontal line. I mean. So we use the horizontal line. We use the horizontal line like this also. We use the horizontal line at this level, and I think that's it. So we use the horizontal line and we use a slant line like this. I just want to see it to be very, very much clearer. So to be very much clearer, that is why I'm taking my time to explain. You understand? So I want it to be very, very, very simple. So once you approach to it on the chart. So I said you should mark out the trend line. You understand? So make sure it might be the liquidity one, or it might be just go to your line chart and mark out the A levels. We call this A levels in MSNR A levels. So what is our take profits? So what's our take? So our take now is you mark out the first you know, 1 2 3. So the first one before market broke it, in a sense, so you mark it out. So you mark it out at this level, you get. So you mark it out here. So let it be very straight, because at this point here, market has not gotten to anywhere here. So this is where market is still tapping this level and breaking to the downside, tapping this level, breaking to the downside. So before this major move occur, and when this major move occur, it's what is broke this trend line you are seeing here. It broke this trend line. So on this context, we use buy stop and sell stop in this context. But we are looking for buy, so what we have to set down is what is a buy stop order. We have been familiar to buy limit, sell limit in MSNR, but I don't think anyone has explained where you can also use buy stop and sell stop order in a chemist way or MSNR way. I don't think so. And to be honest, this is the most simplest form in which you can use your buy stop and sell stop order to take advantage of the market, because once price approach to that level, it's usually a momentum. It's usually a momentum space in which it has to be broken. You get, once price approach to this trend line, breaking trend line, that's your first confirmation. So your first confirmation is breaking the trend line is your first confirmation. And second confirmation is just the liquidity. You make sure it is you're marking out the liquidity level. So at this point here, you can see there's liquidity point at this zone here. So you mark it out. So let it align to what, to a number. You understand? So this is at 146.709. So this aligns to 146.709. So at this level, you set your buy stop at this level, and your SL can be 20 pips, 30 pips. Depends on type of trader you are. So this video is very long, so I'll take my time to explain better. You get, I'll take my time to explain better, and I want you to also watch this video to the end. You understand? So because it might be what you need next. You get. So this is for buying. You understand? So let's take another example again for buying. So make sure you are marking out A levels. You get. So I spot out another A level at this level here. This another A level, two A levels at this point here, two A levels, and I'm also spotting out another A level here at this point. That means there's no way you cannot enter. So far you can spot the right level. You get. Even normal break and retest, it is there. So for those that are familiar with break and retest trend line, this is a break and retest trend line. A break and retest trend line. If you are very familiar with that, that's a break and retest trend line. So for more confirmation again is that you can also take advantage of using that same concept to find entry. You understand? So you can also use that same concept to find entry. So let's assume this was the first one you spotted in the market. So let's assume this was the first one you spotted in the market, before all this movement occur. So you mark out these two levels, and one thing again you have to do is what the liquidity level is also important. So marking out these two levels on the line charts, marking out these two levels, you make sure we are talking about the liquidity breakouts. You get. So 1 and 2, find the one that is very high, the one that has the highest liquidity. So mark it out. So the one that has the highest liquidity points at that level is this one here. Is this one here. This one here has the highest liquidity. It has the highest liquidity. It has the highest liquidity. And make sure this one align to this one, to this. So at this point here, before price approached to this level here, at the edge of this, set your buy stop here. So your buy stop order, everyone knows how to set your buy stop. So your buy stop order will be around here, and your SL should be around 20. This is just 12 pips, maybe 20 pips, and target one is to, it depends on what you want to see in the market. So it actually depends. Even if you got your entry from here, I think this one is like 20, 30 pips SL, because I see markets later gave a drawdown of 30 pips, 24, 25 pips rather. So, but I think this one is also clear. So this one is just 12, 13 pips. Markets, you can decide that your own is to find entry. So the other way around is for you to manage your risk. That's the thing. That's it. But finding entry is very important. So that is what you need. So let's dive into, if we see another level. So this is another level here again. This is another level here. And please, if you are watching this, please subscribe to my YouTube channel. If you are watching this and if you want me to drop more videos, because trust me, I'll be dropping more videos. There are still more things I'll still be dropping on my YouTube channel. So I'll still drop more videos. That is very, very beneficial to everyone. So please, if you are watching this, please subscribe to my YouTube channel, and like, comment, say your thoughts, comment, and backtest this strategy. And after backtesting, come back to this same video and comment. Because your comments will go a long way. You understand? Your comments, that your sincere comments, will go a very long way. So let's continue. So mark out these 2 points. You can see we have 2 points here, these 2 levels here, and I told you the highest liquidity level is where you mark out. So this is the highest liquidity level. And one thing you will know if you are getting it right is that the angle that is being formed is like this. So if you are buying, this is the angle that will be formed, because this will serve as as trend line. It will serve as trend line, and this will serve as a breakout of the trend line. So here will be your entry, where you set your buy stop. Here will be your entry. So this is the formation, and if you are selling, it will be the other way around. It will be the other way around, in this manner. This manner, yes, this manner, and markets keep ranging. Let me stop this here. No, stop. So, and markets keep ranging at this point here. So before we have a breakout. So it now depends on if you want to use this level, because you find actually on every pullback you find liquidity on it, on every pullback. So you can now mark this out. It gets. So we'll still go there. So we'll still go there. Don't worry. We'll still go there. So let's do this manually without taking our time. Let's do this manually. So that's our number two. So number two, you set your what, your buy stop order here, risking, this is no drawdown here. Market just keep moving to the upside, so no drawdown. I think our market did 1:3, 1:3, 1:4. Yeah, more than that depends on what you are risking. So it might be 1:7, it might be 1:6, 1:5. So uh, that's another example again. So third example um, I'll be looking at is, you can see this level. Let's assume you mark out this. I'm still waiting for this. I'm still waiting for this because there must be a breakout here on this one here. So I'm currently trying to set order here. So I'm just still waiting. This 12:37 a.m. midnight. You can see I'm doing this at this time. So mark out this level here. So marking out this level, what happened? So market did not break above here, but so I think the market was more like a sell. You get. So if market did not break, just leave it. You are safe. So that is how safe you can be in the market. So if market is not breaking above, just leave it. So that is how safe. So you are not seeing your confirmation, you are not entering the market. So let's also dive in. Let's dive in again. Let's dive in. So at this level, we also got another. Okay, let's assume you want to set this also. So on this level, we set this our trend line, and we're looking for a breakout to occur. But what happened? There was no breakout. There was no breakout here. But if you are smart enough, there are two things in which I do. Two things in which I do is marking out this level and also marking out this level too. Marking out this level too. So just make sure you're marking out a trend line. You are marking out trend lines. Just make sure you're marking out trend line. So it depends on which one that broke. So because if it's above, you definitely get tapped in, and if it's below, you definitely get tapped in. So this is it. So the first liquidity that we have here is at this level here, but you can see market is not that moving out. This is your Monday market, Monday Tuesday market. So the market is not that moving. So marking out this first liquidity level here. So price just did what? Price book out this trend line. You can see price book out this trend line here, and after breaking this trend line, this is this first liquidity level at this level here. Just make sure it is on that liquidity level here. This is where you are entering. So markets just broke out and did just few pips before breaking. It's not just giving us this is just normal consolidation in the market. It's not giving us a clear view. And make sure after doing that, current market again, make sure you're marking out liquidity. You're marking out trend line also. So let's assume after that you notice on Monday this is just kind of ranging and ranging and ranging. So mark out the I and mark out the I like this of the A levels, and also mark out the V of the V levels. Mark out the V's. You understand? To just play smart. But normally the trend is uptrend. So look for buys. But you can also play smart. So if you understand this video very well, like just watch it like 2 times or 3 times to understand it very well. So you can see how you can play smart. But for now, if it's uptrend, let's focus on uptrend. And if it's downtrend, let's focus on downtrend. That is what you are doing right now. It is an uptrend, guys. So mark out the A levels. So marking out the A level trend line. So the trend of the market is this, using trend line to mark out the A levels. You can see it is tapping here and keep tapping here before it break out. So, and mind you, I said The liquidity level is what you need. So mark out the liquidity level here is what you need. So